What is going on, everybody? I hope you guys are doing well out there. AT&T reported their Q1 results this morning, and we're going to jump into them. We're going to take a look at the revenue, the profit, the interest expense, the debt, all the stuff that they've got going on here. We'll take a look at that all-important Warner Media segment. We'll run down a little bit of the news. Just over the last quarter, the company has been making a little bit of news. We'll catch you up on all of that, and then we'll jump over to the stock chart on this one. Guess what? We're up 4.6% on this one, and we're approaching a range where if we can put up some green candles over the next couple of days, there is some gigantic blue sky over this stock. Could we be on a momentum train with AT&T? Can you believe it? That would be exciting. Now, over the last year, stock's up fractionally, 0.8%. Year to date, up 4.69%. Like I said, we're up 4.67% on this one. Full disclosure, I have some shares of AT&T in several of my portfolios. Now, dividend yield. A lot of you probably buying this stock for this juicy 6.9% dividend yield. Even after today's move, you're earning a ton of money on your money on this one. Put this in your tech portfolio and smoke it, because we've got a $2.08 dividend. That's per share. We've got a PE forward of only 9.58. Boy, when you're talking about value stocks, AT&T could be near the top. Now, AT&T climbed 5%. Look, investors were kind of like not really expecting a whole lot, and now this stock is at a 10-month high after analysts praised their wireless and streaming results. Obviously, they got HBO, they've got other stuff going on, they've got Warner, they've got obviously their big cell phone business as well. And so, boy, things are churning over at AT&T. Now, one of their prime properties is this Turner Sports, which is TNT, primarily shows games on the NBA. And the NBA is looking to quadruple their annual price in their media talks. It appears that AT&T, or Turner Sports in this case, is likely to stay in the running for those deals, but they will have to pay more for that. Now, making sense of the record 5G spectrum auction, AT&T bid $23.4 billion. This was back in February in a record auction where Verizon spent about $45 billion and T-Mobile spent about $9 billion. We'll see evidence of this $23.4 billion when we go over the financials here in just a second. Now, the other major news that AT&T made during the quarter is they spun off their DirecTV unit. Okay, they purchased this, I think, in 2015, for $48.5 billion. Now, unfortunately, they had to sell about 30. So what they did is they sold 30% of it to basically a private equity group, TPG Capital. Okay. Now, unfortunately, AT&T still owns 70% of the common equity. TPG will own 30%. Now, the unfortunate part is the enterprise value of DirecTV, just 6 years after DirecTV bought it for $48.5 billion. Now the unit is valued at $16.25 billion. So that's a little unfortunate. Obviously, management blunder there. You wouldn't want to see AT&T do something like that again, but they did get about $7.8 billion from the transaction, and the CEO said that they will use that $8 billion from the DirecTV deal to reduce the debt over on the company. Now, speaking of the company, let's take a look at the results. I love AT&T CFO, how they just lay it out quarter over quarter over quarter over quarter. They gave you like a 2-year view, quarter over quarter. You kind of get a view of how things are going. So let's jump right in here. So we've got our operating revenues right here on top, okay? We came in right here at 40, we'll call that $44 billion. It's $43.9 billion, but rounded up, you're right at $44 billion, okay? Now, here's a year ago period right here, 3/31/20. We were at 42, call it 43, and 2 years ago we were sitting right at about 44, almost 45. Now, just continues kind of a strong run here on this top line revenue. The fourth quarter tends to be a big quarter for them, tends to be the biggest quarter for AT&T. You got new phones from Apple, usually maybe even Samsung. You got people switching plans, things of that nature right here at the end of the quarter or starting new plans. So it tends to be a big jump for them typically from the other quarters. But this is a strong quarter, okay? $44 billion on that top line, really nice. Now let's take a look at expenses, because I think this is something that AT&T needed to work on, and we've seen evidence that they've started to cut cost, and we're still seeing evidence of that. So we've got equipment cost here coming in at $5.5 billion. That's quite a bit lower than the previous quarter, but it is elevated over where we were a year ago and obviously 2 years ago as well, but not necessarily something I'd be too concerned about. You got to give away the equipment, so to speak, in order to generate kind of more of those top line revenues. We've got our broadcast programming and operations that came in at 7.5. That's basically a little less than where we were last quarter, but it's over where we were a year ago, but it's basically flat. So that's coming in line as well. We've got other cost in revenues coming in at we'll round that up to about $8 billion. That is in line with what we've seen for nearly 2 years here. Now we've got selling, general, and administrative. This is a cost line where you probably could squeak out some cuts. We came in at $9.4 billion, less than we were a quarter ago, but elevated where we were a year ago. 2 years ago, essentially flat, maybe down just slightly, but essentially in line. Now we've got depreciation and amortization. This is a non-cash charge. This is something we'll analyze a little bit more when we get over to cash flows. So we've got our total operating expenses. So we have this top line here. This is our revenue, $44 billion. We've got our total operating expenses coming in at $36 billion, way less than we were in Q4, although we had kind of this one-time charge here that really impacted that. $36 billion is essentially in line where we've been over the last 2 years, if not down just slightly. So all things being considered, inline quarter in terms of expenses, slightly better than expected, I think, from the revenue side. So I've got our operating income here. So you take this number, you minus this number, and you get this number. It's $7.6 billion. AT&T is earning $7.6 billion operating the business. Now they have some interest expense. They've got income taxes, things of that nature, but this $7.6 billion number, notice that it's higher than any quarter going back almost 2 years. Okay, we've got a $7.9 billion operating income spot back in 2019, but in nearly 2 years, this is as high as it's been. So that is very, very strong, because you see here, we've got this interest expense, okay? Everybody talks about AT&T's debt, and I think it's certainly worth talking about. This is a company that, unlike Verizon, has spent their debt on things like buying DirecTV, buying Warner Media. They haven't just spent it on, acquiring spectrum and building out their core business. They've kind of branched off. And so I think that has some investors worried a little bit. But take a look at this extra interest expense. Came in at $1.8 billion. That is basically in line where we were a quarter ago, and it is down over every other quarter that we've seen over the last 2 years. Now, obviously, they've been paying down their debt. They've been refinancing, those types of things. So all in all, not bad. When you make $7.6 billion operating the business, sure, $1.8 billion on the interest expense line, not necessarily that big of a deal, quite frankly. Now, they've got some other income here. Could be related to the DirecTV sale. Could be related to some other things. So we've got income before taxes is here. Let's just go. Look, none of us can avoid paying taxes unless you're maybe mega rich. Net income coming down here, $7.9 billion. Hello. $7.9 billion. We had some funky charges in Q4 of the previous quarter, so I'm going to ignore this big, gigantic loss here because it's a little bit of an anomaly. But look, $7.9 billion is way over, almost 2 times, in some cases even more than that, than what we've done at AT&T for nearly 2 years. I mean, they've printed a ton of money to this bottom line, okay? Diluted earnings per share coming in at $1.04. We've got this adjusted earnings per share coming in at 86 cents. Again, this is a company that pays $2.08 per share for a dividend. So earning 86 cents in a quarter, look, this is fantastic. Okay. This is why the shares are up in the regular trading session. Now, jumping over to the cash flows. So we pull down this phenomenal 7.89, basically $8 billion on this net income side. Okay. Again, that is way over everywhere where we've been over the last year, even 2 years. We add back in some things. We subtract some things. Okay. We come down here. We printed basically $10 billion to the cash flows. That's essentially where we're at. Okay. In line with what we've been at with AT&T over the last year. All things being considered, cash flows looking very solid. Now, investing activities. Wanted to show you here. Boom. Take a look. We just peeled off $27 billion in the quarter in investing activities. When I say peeled off, I mean we spent $26.9 billion to be exact of investing activities. Where did it all come from? Yes, you guessed it. That's Spectrum auction. $22.8 billion. I showed you up here that they spent in this press release, they say $23.4 billion, maybe after adjustment, some fees, things like that. Here it is right here on the cash flow statements. We peeled off $26 billion. So you better believe they had to do some other stuff because they didn't make that much money in the quarter. So guess what they did? You guessed it. The issuance of other short-term borrowings came in at $15.5 billion. Issuance of long-term debt right here came in at $9 billion. So they paid some long-term debt back, but they bolted on a ton of it. And here's our dividends paid right here. $3.74 billion, again, basically in line with where they've been over the last year or so. So here's some things to take away. Obviously, this Spectrum auction, it is something that fairly regularly occurs with AT&T, but we're not talking about something that is happening all the time. Okay. It's a once in a few years type thing, typically with these types of companies. So, and that was a record breaking auction. But we had $9.9 billion worth of cash flow off $7.9 billion worth of net income. We pay $3.7 billion worth of dividends. And I showed you that on the previous slide, we had a $1.8 billion worth of interest expense, got some taxes and things like that. Look, this is a company that is managing everything very nicely and, in my opinion, looks pretty solid. Now, last thing I want to take a look at. Okay, I think we can understand that the communication business, mobility business, wireline, all this stuff is performing as we'd expect. Okay, I want to take a look at this Warner Media because this includes HBO, this includes TNT, things of that. I think even CNN as well. I want to see how this is performing because they spent a lot of money on this. And so I want this, in my opinion, too, this is the biggest upside to AT&T. Okay, because in communications, you're going to see some growth. You're going to see some churn, things like that. You're not necessarily going to see big upside in that. Warner Media, you could maybe potentially see some big upside in that. And let's take a look. So this is operating revenues and adjusted EBITDA. On the top line, we have our operating revenues here. Here's our Warner Media right here. In the most recent quarter, we came in at $8.5 billion, essentially flat here, but elevated over where we were a year ago, and we're basically back to where we were 2 years ago. So could potentially be in a more quote-unquote normal advertising environment. Some advertisers are still pulling back, okay? There's still less travel going on this day, still less leisure travel, things like that, vacations, restaurants, those types of things are still not fully back. So once you get them fully back, it could be that you have a little bit better quarter here in terms of advertising on this Warner Media. So all things being considered, looking pretty good from the adjusted EBITDA side. I hate adjusted numbers, but that's what we got to work with right here. Came in at $2.1 billion on that Warner Media. Again, slightly lower than Q4, but I think I'd probably expect that. But it's elevated over where we've been over the last other 4 quarters outside the fourth quarter. So all things being considered, AT&T is looking pretty strong in my opinion. Now, speaking of looking strong, this stock chart is looking pretty good right now. We're at a critical level with AT&T. I've got us on a weekly view. I've got it zoomed out here. I want to zoom in here in a second. I just want to show you this big, gigantic drawdown in this one. We've also got basically a well-defined top in this stock. Okay, well-defined top way up there at $39 per share. We're right here at $31 per share. This stock for the last, for the last year or so, a little over a year. We obviously had that big drawdown in March like most stocks did. This stock hasn't recovered, okay? It was up at $39 pre-pandemic, and it dropped all the way down here to $26, $27 per share, and basically has been hanging out there for a while now. Now, it peaked its head up for 2 weeks back, shortly in the summertime of last year, but then came all the way back down here to $26, $27 per share, and here we are at 31. So we're at a critical level. Can we bust up above 31? We did it in the summer of last year, and this thing reversed, but some different things are going on with AT&T. They're paying down their debt. They're showing investors that they're being a little bit more fiscally responsible. HBO Max, they finally got, I think they had like HBO Now and some other stuff going on there. They've kind of tightened that marketing up, and it appears they've got some momentum in this business. And take a look at this big green moving average. Well, it's flattened out, and it looks like it wants to go positive. And we finally have in this stock, in my opinion, a pretty well-defined move that we're making like this. If we this 31 level, you see sellers step in here. Okay, sellers stepped in here. They eventually stepped in here. They stepped in here. They're stepping in here as well. Okay, sellers step in at $31 a share on AT&T. But if more buyers can show up in the coming weeks, hello, there's green skies over this one. 32, 33, 34, 35. I mean, literally all the way back up to this cluster of price action up here, $36, $37 per share. You've probably got about $6 in upside in this one with $2 to $3 in downside. Could we come back down here and retest $27, $26? Sure, you probably could. I think I'd put a stop loss in this one at 29. You'd be hitting this moving average. You'd be hitting this big gigantic cluster here. So a $2 stop loss to make $6, $7, maybe even potentially $8 per share. On top of that, you're getting paid more than 6% on your money to wait this one out. Again, this isn't something I would go all in on. This isn't necessarily a cornerstone of my portfolio, but I like the setup that we've got here with AT&T. I think this is an interesting stock. The financials look really good. The chart looks really good. The news flow is looking good with this stock. All things being considered, AT&T is looking pretty strong right now. Let me know down in the comments what you think about this one. Hopefully you guys have a great day. We'll be back, of course, with lots more videos this weekend, next week, really for the rest of the year as well. Thanks for tuning in. Good luck with your investments.